And we're back. Thanks everybody for joining us here with Josh again. Josh, what can you tell us about what the StatsCan numbers are that have been released here this morning, and maybe what the effect on inflation is going to be in 20?
Well, here we are. It's toward the end of February of 2024. We now have the January 2024 inflation numbers. And what's really exciting is that the inflation numbers for January came in less than the market was anticipating for January. So this morning I was reading in the news some opinion pieces and economy pieces where they're talking about how maybe the Bank of Canada is not going to be able to lower its rate as early as we were hoping or projecting, because the inflation numbers were going to come in higher than hoped, but as expected. The good thing is the expectation was for it to be the same as December 2023's, but it actually came in 0.5% below that at 2.9%. So what this isn't doing is it's not saying the Bank of Canada is going to go ahead and drop its interest rate starting in March, or even in May, but it is providing a clear path for the Bank of Canada to make its first interest rate drop probably as early as June, with a full percent of interest rate drops between now and the end of the year. This is the lowest inflation number that's been reported by Stats Canada since June of 2023, when it briefly dropped to 2.8%. Everybody was pretty excited when that happened, but since then it's been ranging as high as 4%. We know the Bank of Canada's target is at a 2% inflation rate, with a bit of a band on either side of it, but the target being right at 2%. And earlier this month, the Bank of Canada Governor Tiff Macklem was testifying before the House of Commons that while we don't need inflation rates to be at 2%, we do need to have good proof that we are on track to get to that point. And today's inflation numbers are providing some more of that confidence. When we're looking at what's causing inflation right now, a big chunk of what's still causing inflation is actually related to shelter costs. TD economist Leslie Pearson tells us that shelter inflation has become the biggest hurdle in preventing the Bank of Canada from cutting interest rates. And the part about mortgage interest, that is directly a result of Bank of Canada policy. So they can be the only ones to really slow that down. But rent inflation, that's also quite high. Year over year, rent inflation in January came in at 7.8%. Government is making some steps to try to lower that by encouraging purpose-built rental properties at very low interest rates for those builders through a special program at CMHC. They're also talking about maybe capping the number of international students allowed in Canada. I have mixed feelings about that one, but it would reduce the number of students needing rentals, possibly opening up some additional rental inventory. We're also seeing various municipalities around the country and the government trying to push back against the idea of purchasing homes for Airbnb, and having fewer homes purchased for short-term rentals will leave more inventory on the market for longer-term rentals as well. The mortgage interest inflation is up 27% year over year. As more and more mortgages are renewing into higher interest rates over the last year, we are seeing that increase. And again, that really directly connected to the Bank of Canada's earlier policy of very low rates and its current policy of higher interest rates. So when you exclude those numbers for shelter, the inflation is actually a lot closer to the 2% target that we want it to be. And so, Jay, what we're expecting now is, with today's numbers, it looks like the expectation of the Bank of Canada making its first cut to its policy rate is firmly on track to happen in June of 2000.
Awesome. Yeah, and in the market here in Edmonton, we're seeing buyers starting to believe this. We are active with offers coming in on my new construction properties. They're definitely busier than they were last month. We've got emails from some of the big builders that, hey, we've already raised our prices, $20,000. Inventory is dropping. And I do believe buyers believe this as well. And they're starting to take some pretty aggressive action to snap up what's available. I'm not sure how you feel about this, but is it worth buying right now or waiting for a rate cut? And I still think it's a better deal to buy at a little bit of a higher rate, right? And get the house at a lower price.
Yeah, I would say so, Jay. I know there's a certain amount of skepticism when realtors or mortgage brokers say, buy now, now's always the best time. But if you actually take a look at the numbers, especially with Edmonton queued for property value increases, as a combination of new population moving from out of province, as well as lower interest rates spurring some more demand. If we compare purchasing something at today's value compared to a lower interest rate and purchasing something even close to the highest average sale price from 2023, which was almost $500,000, the savings by waiting for a lower interest rate when compared to the increased cost of that home. We've talked about this before, but you're looking at maybe $32,000 increase in price just by getting back to June 2023's average price was. And the savings on interest by dropping all the way to 4.5 versus today's of around 5.14 or so, that savings is only $7,500. So you'd be looking at a $31,000 increase in price potentially, so that you can save $7,000 or $8,000 in interest over the next 5 years. I don't think the math really computes and really makes a lot of sense. So if you can get in, whether it be new construction where you can lock in the price today, or get into the market now, even though the rate's still a little bit higher, but get into it now while the prices haven't gone up as they typically do in the spring, the math suggests that you're going to do a lot better by saving on price than you would by saving on reduced interest costs.
Yeah, and the other thing that people probably aren't talking about is the down payment difference. 467,000 at 10% versus 498,000. So there's a savings there as well. So anyway, that's a great chart. Thanks for the update. We'll keep our eye posted on these numbers here and continue to watch and see what they do next.
Fantastic. So for those of you watching us here on YouTube, make sure you like the video. Please subscribe to our channel. We are bringing updates almost every single week, and we're going to keep you informed as to what's going on in Edmonton, what's going on in the Canadian interest rate market, and really just everything there is to know about homes and mortgages. Click on like, click on subscribe, and we'll see you next time.